morning, market movers for Friday, January 10th, 2014. What we're seeing today is basically a bit of a mixed market. We've got the NASDAQ up a little bit, but the Dow and the S&P are down a little bit, at least at the moment, but very quiet so far. I think the Dow's down about 20 points or so at the moment. So only open about an hour so far for the market. Trading's a bit light after the jobs report. We've been waiting for that jobs report all week. We had the ADP report on Wednesday, which showed 238,000 jobs added, and the estimate was for 200,000 jobs for that report. So they came in a little bit better than expected. Today's Commerce Department official government jobs report was really weak, the worst number actually in 3 years, 74,000 jobs added. The estimate was for 193,000, so a huge miss, and again, the worst number in 3 years. One bright spot in the report is the unemployment rate came down to 6.7%, but as we always talk about, the way they calculate the unemployment rate is based on people that are unemployed collecting unemployment benefits, typically get benefits for 6 months, and then once the 6 months is up, you no longer get counted in the official unemployment rate. However, it doesn't mean you got a job, it just means you're not collecting benefits anymore. So 6.7% is a positive increase, or a positive decrease, I should say, an improvement in the unemployment rate. But that 74 jobs added, that's a pretty ugly number. Will this have an effect on whether the Fed tapers more in February from the current $75 billion per month in purchases? We don't know yet. Probably not. They look at trends, but certainly I feel that if the jobs report had been really strong, they might have tapered more in February than they would otherwise. So we might see another 10 billion taper. That's kind of what I'm expecting, taking us down from 75 billion to 65 billion a month in February, but we'll have to wait and see. They meet later this month, so we'll see what the outcome is. Otherwise, again, pretty quiet. The bond market rallied a little bit on this. The 10-year Treasury down to about 2.88%. So we're below that 3% threshold by a little bit at the moment, with bond prices up and yields down a little bit. So it's Friday, it's early. Hopefully we'll go into next week and see how things pan out as we continue to get closer to the Fed meeting. Also, Alcoa reported earnings yesterday. They were pretty disappointing, and that's the first sort of major component to report earnings. We're going to have a lot more earnings next week and over the next several weeks to talk about. So lots going on.